Now I'm going to show you how to create the balance sheet. And the balance sheet is the final statement in the three statements that we're going to cover in this chapter, right? So I'm going to have another video where I explain some of the concepts with the balance sheet, but in this video, I'm just focused on how to create a balance sheet. So one of the things we need to do is we need to figure out total assets, then we need to figure out total liabilities and stockholders' equity. So that's the way the balance sheet is organized. So first we want to figure out total assets, and assets are divided into current assets and plan assets, or current assets and long-term assets. There are actually more assets than just plant assets, but for now we're just going to focus on current assets and plan assets. And so you'll see the current assets here and then total current assets. You'll see the plan assets here and then total plan assets. So we're going to go to the trial balance and pull the numbers. So cash, we're going to look for cash of 210,000, and I'm going to come in and put in 210,000. Accounts receivable, I'm going to look for accounts receivable of 20,000, and I'm going to pull in 20,000. And later on in the course, we're going to define what these are, right? What assets are and how to read them. But now I just want you to get experience creating the balance sheet. And then we have inventory, and I'm going to go to inventory, and here inventory is 40,000, and then I'm going to put in 40,000. Then you have office supplies. So office supplies is 5,000, and so I'm going to put in 5,000. And prepaid insurance is 20,000. I'm going to put in 20,000. And then prepaid rent is 50,000, and so I'm going to put in 50,000. So these are all my current assets, and these in this class are always going to be current assets. So my total current assets now, I add all of these up, and my total current assets are $345,000. Okay? So now I look for my plant assets, and this is where things get a little bit tricky, right? So you'll look for land. Land is the first one. So my land is 100,000, and so I'm going to put it in 100,000. And then I have other types of plant assets: equipment, furniture and fixtures, and building. And next to it, this thing called accumulated depreciation. You're not going to understand what accumulated depreciation is yet, but accumulated depreciation is how accountants measure the using up of an asset. And that's going to make sense later when we actually get to the fixed asset chapter. But all these plant assets, right, have accumulated depreciation associated with it. So when you buy the equipment, you're going to track how much you use the equipment up, and you're going to put it into an accumulated depreciation equipment account. Furniture and fixtures, you're going to buy it, and then you're going to track how much you use it up, and then you're going to have accumulated depreciation furniture and fixtures account. Notice that land doesn't have any accumulated depreciation land account. Land is the only plant asset that does not have any accumulated depreciation associated with it. Okay, so let's take a look at this. So we have equipment. So here we're going to look for equipment. Equipment is 100,000, and so I'm going to put in 100,000. But then I'm going to go to accumulated depreciation for equipment of 10,000, and I'm going to put in 10,000 here, right? So 100 minus 10, that's going to be 90, and that is what we call the net equipment balance, right? So 100,000 minus 10,000 gives me 90,000, and that is the net equipment balance. I'm going to do the same thing for furniture and fixtures. So I'm going to look for furniture and fixtures. Here I have 200,000, so I'm going to put that in here for 200,000. And I'm going to say less accumulated depreciation furniture. So I'm going to less accumulated depreciation furniture and fixtures of 5,000. I'm going to put that in. Notice it's put in parentheses. So now I have 200,000 minus 5,000. That gives me 195,000. Now I'm going to do the same thing for building. So I'm going to go to building of 300,000 and accumulated depreciation for the building of 30,000. So here I have building, accumulated depreciation for the building. Let me change this view so it's normal, right? It's a little bit better. Accumulated depreciation for the building, and then the net is 270,000. Okay? So now I need to calculate. So you see I have land, and then I have net equipment, which is equipment minus accumulated depreciation, or plus accumulated depreciation because it's parentheses. Furniture and fixtures, less accumulated depreciation, so I net these two together to get 195. Building, less accumulated depreciation, so I net these two together to get 270, and my total plan assets now is the sum of the land, the 100,000, plus the 90,000, plus the 195, plus the 270, and that's going to give me 655,000. So I just add up these pieces here, and I get 655,000. And so how do I get total assets? Well, I take my current assets, total current assets of 345, plus my total plan assets is 655, and that gives me total assets of $1 million. Okay? So I'm going to stop the video here, and I'm going to create a separate video that's going to go over the rest of the balance sheet. So this is sort of balance sheet part 1.